It's Michael from B Ninjas. I just want to talk quickly through Profit First for agencies. So, a quick high level summary of Profit First. It's a cash flow management tool which breaks up the key areas of your business and separates them out into different bank accounts. So, you will set up a different bank account for your income, which is where all your revenue flows into. You'll set up a different one for profit, for your owner's pay, set aside money for taxes, and then what's left over, you pay your operating expenses with. The audit is really important in this. It's a behavioral management tool. It's kind of trying to get you to look at what's the most important things in your business and service them first. So what comes first gets looked after. So after you received your income, you take out money for your profit to ensure that you're permanently profitable. The second account that money flows to is your owner's pay, because you need to pay yourself as the most important employee of the business. Next, you're setting aside money for taxes. They're inescapable and they're a cost of doing business, and it's the government's money, so you should put that aside. And then what's left over is your operating expenses, that final account there. And then what's left in there, you have to make do with and run a profitable business. If there's not enough in your operating expenses left over after allocating, then you need to look at becoming more efficient. Pressure creates diamonds. So it's trying to make you a little bit more thrifty with what you're doing in your business. Instead of having a huge pool of cash in one bank account and you receive a couple of invoices and you feel rich and spend it on things you may not need. It's trying to make you really consider what you need to be spending money on in your business by creating a bit of scarcity in your operating expenses. So the allocation rolls from the income account, and you allocate by a certain set percentage that we work out when we first implement it with you. And you allocate a certain percentage to profit, to owner's pay, tax, and then through to operating expenses. There's a built-in mechanical aspect of it where you put two different bank accounts in a separate bank. So not that your main bank account you set the 5 accounts up with, and that's a profit hold and a tax hold account. Those are things that you're setting aside for when you need to pay your taxes, or you do a quarterly distribution of your profits. And so you put them aside in a different bank to remove the temptation of stealing from those accounts when perhaps you're running low in your operating expenses. A person who aims at nothing hits it with amazing accuracy. So the whole point of Profit First is trying to give you a framework to manage your cash needs of the business. This is an example of some of the rough percentages that are recommended when first starting. It's based on your real revenue range. So for revenue of 0 to 250K, you want to be putting aside around 5% for profit, paying you 50% of that for owner's pay, 15% for tax, and 30% for operating expenses. And then it shifts up from there. I would say these are only a guide, and depending on the business model, so for agencies with a larger number of staff, your operating expenses or your wage costs will definitely be larger, and the owner's pay will definitely be a little bit smaller as a result. So it depends on how many people you have on staff at the time. But what we do when we implement is actually work out what the business is currently operating at, and we start with those percentages. And then we kind of use it as a performance management tool and try and adjust quarter by quarter the percentages ever so slightly to get a little bit more efficient, a little bit more profitable, and have more money left over at the end of the year. So that's a quick rundown of Profit First. Thanks for watching, and I hope you got something out of it.